Alrighty, traders, George here, and time for a look at the week ahead. It's Tuesday morning, and I've got a couple things to show you here. For starters, let's take a look at the S&P. I've already got this chart marked up to show you the trade scenarios here. On the balance beam model, if you look to the left, there's a lot of trading commitment up here in the middle of the chart and a little bit more down below where we are right now. So if we trade a bit higher than where we are, we'll look to get long here at 86.50s. And then up to these key numbers here for the three ensuing targets. Now if we can trade up to this level here in the 1920 range, pull back, and then trade higher, we'll look to be long over 1921 quarters for a second phase long. If that's able to materialize, we'll look for 30, 42, and 55s for the upside there. We want to make sure we're trailing +2 on +3 in favor from the initial stop loss of 6 points. And then to the short side, if we trade higher at least to 1918 and then break back below 1910, we'll look to be short at 1909.50s, going to 1900, 1890, and 1882. Same deal with the trails. Now on either of these setups here, we'll look to re-enter up to one time, okay? Kind of the same deal for oil here. We'll look to get long here just over 29.60s, going up to these targets. If we can rally higher and then break lower, we'll look to get short at 30.94s after a print of 31.40s, going back to these targets. And we'll look for one re-entry in each of these setups, long and short. Okay, trail +5 for every 10 in favor from the initial stop loss of 30 ticks. Those are your two balance beam setups for the week, and we'll see how they shake out in the days ahead. Until then, we'll see you back in the live room.